Good afternoon, everyone. Thanks for joining us for Self-Directed IRA Saturday. I'm not sure depending on where you're coming from, but I know here it is a little bit chilly, so I am very glad to be inside right now where it is warm to get some education here. But my name is Sarah. I am the communications manager here at Quest Trust Company. I'm very happy to present to you guys a new speaker and a new topic that we've actually never brought to our Quest stages before. But I am real quickly just going to run through just a couple quick announcements, some upcoming events that we have, got a couple coupon codes for you. So just bear with me for the next, maybe 5 or 6 minutes here. But just like this class, we have educational resources in the way of webinars, networking events, happy hours, hybrid events, conferences, you name it. So here it says every Tuesday. We don't do them every Tuesday anymore, but we do them usually on the last Tuesday of the month. We'll do them every Saturday for Self-Directed IRA Saturday right now at noon, like the one that you're at. We also have our National Networking Happy Hour. That one takes place on the fourth Wednesday of every month at 6:30. We also have Self-Directed IRA Social. Like I mentioned, those are a hybrid event that we do in all of our cities, as well as lunch and learns. So depending on what city you're in, we will have those in Houston, Austin, and Dallas on respective weeks, depending on what week of the month it is. But yeah, if you do miss a class, you can always go back and watch them on YouTube or on Facebook. We do stream them live like we are right now. So if you ever miss a little bit of a part, you want to go back and watch it, maybe you have a friend that would really benefit from this class, feel free to send them this link. We keep these up there in our repertoire for years and years to come. So this is the Masters of Tax Avoidance Bootcamp. I am so excited for this event that we have coming up. We actually just finished and finalized our whole speaker lineup. We're bringing new panelists, new keynotes. We have completely brand new topics that we have never talked about at any Quest event before. So I know a lot of the feedback that we got was, we want to see something new, give us something that we wouldn't expect. So we're doing that. Bear with me there. I lost my slides, but I'm just going to keep running through them because I have them memorized. But the Masters of Tax Avoidance Bootcamp. Oh, awesome. There we go. Thank you. This is a really great event. I'm going to have Juan actually, I see he posted the coupon code in the line there, the link to join there for you. But this coupon code, if you would like to get a discounted ticket, we're going to give you 50% off only today. So for being a part of the special events coming to our Quest events, if you use MTA50, MTA50, it's going to get you 50% off. So we'll post that down there in the comments, but be sure to go and check that one out. So next I have Quest Cares, which is the promotion that we have for this month. So what we're going to be doing is if you choose to open an account in the month of February, we are going to spread the love. So you'll be entered into a drawing to win a $500 gift card. So you can take almost a whole trip on Quest for the month of February when you open a new Quest account. Next, we have our Refer a Friend promotion. This one we always have going on. The Refer a Friend promotion lets you know that if you have a friend that may benefit from a self-directed IRA and you share self-directed IRAs at Quest with them, we're gonna give you a little bit of a gift for that. So you're gonna get a credit to your account, but they're also gonna get a credit to their account. So both of you guys, it's a win-win situation. Share the love and spread how self-direction works with them. And then lastly, we just have our how to get in contact with us slide. If you would like, you can give us a call, 855-FUN-IRAs. We also have the live chat feature on our website. You can email us. It's iraspecialists@questtrust.com. And again, we'll post that email address for you there in the link if you would like to, copy and paste it and send us an email. Or you can scan this QR code right here. It'll take you to the page our Calendly page where you can get a direct calendar. You can pick what time works for you and get your consultation scheduled. It doesn't have to be for a new account. Maybe you're already an existing client, have some account questions, want to do some beginning of the year maintenance. Like I said, we're always here for you as a resource no matter what we can do. So those are all of my slides. I'm going to have our AV team pull them down, and I'm just going to real quickly introduce Whitney. I have found that whenever I try to do the bios, it's not as good as when they do it. So I'm going to bring up Whitney. She's going to talk to us about how you can invest in car washes and even do it with a self-directed IRA. So Whitney, thanks for joining with us, and take it away.
Yeah, thank you so much for having me here. If you can pull up my slides, we'll go ahead and launch in. Instead of making you guys wait until the end, if you wanted to reach out to me, my contact's here on this first screen. Go ahead and take a little screenshot. That way you have it. My email's there. If you're interested at any point in time in learning more about car washes, want to talk all things real estate, my information's there. You can go to passiveinvestingwithwhitney.com. There, I've just got a short little intake form, as well as you can see my calendar and schedule time with me. But my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. We are a private equity firm that helps our investors invest in good cash flowing passive investments that produce not only the cash flow, equity appreciation, diversify across markets, as well as provide tax benefits. And when you couple those tax benefits with the self-directed IRA, guess what? You get a nice little boost there. Anyways, what we're going to talk about today are car washes. Before I launch into that, you guys don't know me. And for me, I actually started real estate investing back in 2002. I didn't come out of the womb investing in real estate. I didn't go to college for this. I actually just bought a house with a significant other, and about a month after purchasing the house, the relationship fell apart. And fast forward, I started, I tried to figure out how to rehab this house and get it repositioned and sell because I was scared. This was right before the 2008 meltdown and the lead up to that. And so repaired the house, sold it a few months later, and then made more money in that transaction than I did in my day job that had me traveling almost 80 hours a week. Fast forward, I did several more flips like that. We call it live-in flipping and house hacking now. But then I was joined by my husband here, who's on the screen, and we started doing more projects together, and we got really good at building buckets of equity. We were really bad at building cash flow. So we could not figure out how people were retiring off of real estate. It just was a concept foreign to us. Until one day a friend mentioned to us, like, hey, why don't you keep one of those flips and put a renter in it? And I'm like, genius idea. It just never occurred to us. It was like one of those slap yourself in the head moments. And we built up a portfolio of over 30 single family rentals, and then eventually realized we needed to scale with larger transactions. So we transitioned into multifamily investing, started peppering in some self-storage investing, but we were doing this all actively. And then guess what? We had a little baby girl who's pictured here. She's now 10. And, time just changed for us immensely. And so we were like, we need to figure out how to tap into large equity positions in real estate in a more passive manner and get our time back so we can spend it with what we want to do, which is travel, spend it with family, friends, and travel. And, fast forward today, collectively, my husband and I, this is our personal portfolio. We've built a portfolio of over 6,500 multifamily units, 2,200 self-storage units now, and 8 car washes. And it's today we're going to talk about those express car washes, but really what this portfolio has allowed us to do is the results. It's allowed us to have 100% control and choice on how we spend our time. We both still work because we love to work. We love creating the impact that, we are in positions where we can create impact in the world. So it's very heart aligned. And we can help any investor that resonates with this message. We can help you do that here at passiveinvesting.com. Here at our company, we have 1.3 billion assets under management and very strong returns to our limited partner investors. But today's presentation is about how to invest in express car washes. And just quick disclaimer, this is very educational. We're not going to talk about, anything financial advice, tax advice, legal advice. If anything is construed like that, make sure you take that information back to your investment team before making an investment decision. Now, first of all, why would you even, and I apologize for the sniffy nose, guys, but tis the season, right? But why would you even want to consider investing in express car washes? We talk a lot about multifamily real estate, self-storage, mobile home parks, but why would you want to consider adding this to your portfolio? Well, first, let's just talk about the different types of car washes. And there's 4 different types of car washes. There's first, we're very familiar with is the in-bay do-it-yourself model, where you pull into kind of like a concrete garage. There's a drain in the floor. You drop your quarters in the wall, and you get your little brush and wand. You clean your car yourself. We have a vehicle that we still have to clean that way, and I just pray my 10-year-old doesn't spray me with the hose anytime that we have to go and clean it. And then we've got the in-bay automatic. This is, the type of car wash that is attached to, say, like a gas station. It might be able to get 1 or 2 cars through, in say 15, 20 minutes. But if you're like 3rd or 4th car back in line, you're probably leaving to go do something else. And then on the other end of the spectrum, we've got the full service car wash. And this is where you pull in and there's an army of people ready to vacuum your car, clean it out. It goes through a short tunnel where it gets washed. And then at the end, there's an army of people ready to wipe down the car, clean your floor mats, all that sort of stuff. But these are very labor intensive models and don't scale that efficiently. So and I didn't really touch on the express tunnel car wash, but that is the only model that actually really scales efficiently. And what that looks like, you might already have one in your area where you drive in. There's a whole bank of vacuums. Maybe you have to pay for them. Maybe they're included with the subscription, but you can go in and quickly vacuum out your car, or you could pay somebody to vacuum your car. And then it goes through a long tunnel, say like 60 to 120 feet long, and it's end to end in that tunnel. So it's getting pre-washed, washed. It's, getting all sorts of shines put on it, tire waxes, everything's happening in that tunnel. It comes out dry. And so, this whole service is only taking you about 5 minutes. So you can quickly do it on your way to work if you wanted to, or on your way back from work. Now, this model scales incredibly efficiently because it only requires about 2 to 3 full-time employees to execute. And you can wash about 400 to 500 cars a day. So it's a very attractive model for people who either want to build one ground up for themselves or figure out a way to invest passively in somebody else's deal, which is what we're going to focus on today. But let's talk about the industry as a whole. Like, why would you, now that we know the different types of car washes, why should we even consider the industry as a whole, adding this to our portfolio? At least in more so, not just like a one-off type transaction, but making it kind of a core development part of our portfolio. Well, the industry today, it's a $33 billion and growing industry, and it's growing at about a 4% clip annually. And that's across all those 4 different kinds of car washes that I spoke about. But the express car wash arena, that sub market, is actually growing at almost double, at about 8%. Now, for those of you who've invested for a very long time, you probably remember back in 2006, 7, and 8 that storage facilities, investing them at an institutional level, was kind of coming online, and everybody was getting really excited about it. Why? Is because it was a fractionalized industry. You had a lot of mom and pop owners. Big money hadn't really gotten into it because there was no third-party management. Same thing is happening in the car wash industry. It's a very fractionalized business. Less than 15% of the owners actually own more than 5 locations. And why is that important to think about now? Is that it's ripe for disruption. We can get in as equity groups and get in and start conglomerating these assets now before big money gets in. And we can start solving the problems around third-party management companies before big money gets in. So it's very attractive there. We're at the beginning phases of this consolidation. Now, Maybe you're thinking to yourself like, ooh, this like looks interesting. Maybe I want to try to figure out how to do one myself. Car washes are very appealing, especially the express tunnel arenas, because they're low operational overhead businesses. So, with very high margins. So you're sometimes getting up 40 to 60% profit margin on these type of businesses. And so that's the industry as a whole. Those are some kind of key metrics about the industry. Then we've got the customer, right? I think everybody right now, is reading the headlines and they're going, "We're going into a recession. What is going to happen to the customer of this business?" Well, car washes, we have data going back to 2011, 2000, 2020, and even today that demonstrates to us that this is a very recession resilient industry. But it's because of the customer and the behavior that's attached to it that most people in the United States have a car, okay? And people who have a car, they wash their car about 13 times a year. And so once it's an established behavior, it's not one that's given up very well. Of all those people who wash their cars, okay, and we all know that one person that doesn't wash their cars, right? 72% of them actually prefer going to an express car wash, okay, opposed to the other models. Why? Because it's more time efficient and economic efficient. And when we talk about just the customer in this potential recession environment, customers, when the economy starts kind of flatlining or tanking a little bit, actually have to take better cares of their cars, like everybody does. It's harder to get a new car. Maybe they can't access lending. Maybe the car's just, like back in 2020 and 2021, the car's just not available to them to get. And so people actually take better care of the cars. So we actually see car washes go up during recession times. All right, now let's circle back, kind of complete the circle, and come back to the actual express tunnel itself. Again, we're in this early consolidation phase, so it's really attractive with the mom and pop owners. And kind of pointing back to the fractionalization of the industry, a mom and pop owner, when they get into the space, they have to get up to 5 to 10 locations before they can hire a regional manager. And unfortunately, most people that have gotten into the space didn't really realize that. They thought they were going to be able to automate it more and step out of their businesses. So we have a unique window here to be able to go in and start consolidating this industry right now. It's a very scalable model. It helps investors shift their income from linear to residual income. Why? Because of the high margins. We can layer on a lot of technology in this industry as well. So, for anybody who has tried to rent a self-storage unit in, a large metropolitan service area recently, you're probably, interacting with call centers, as well as, maybe you have a scan card. It's not a lot of manned facilities. We can actually use a lot of that technology in the car wash industry too. And the equipment is just purely getting better to make it an environmental, help shift these car washes to be more environmental, with water reclamation systems, ability to actually monitor like the electricity usage within the tunnel. Chemicals are getting better, so we can actually help people wash their cars and actually lower the environmental impact of doing so. All right, so let's talk about, now that we understand the car wash industry as a whole, let's go in and talk about how does investing in express car wash, whether you do it actively yourself or whether you do it passively with a private equity group, how can that help align to some of the goals in your portfolio? And for me, I always evaluate a deal according to 7 wealth principles. And that is, it must be able to provide capital preservation, cash flow, equity growth, tax benefits, smart and safe use of leverage. All right. It has to be an inflation hedge. And I have to be able to have good operations on it, whether I do the operations myself or I'm investing with an operator. So let's go and evaluate a car wash, this industry, express car wash industry, according to these 7 wealth building principles. All right. So it's, like any piece of real estate, express car wash can provide capital preservation. There are some guidelines around this. And they might look very familiar, especially if you're used to investing in multifamily real estate, self-storage real estate. These type of facilities do very well in growth markets where population's growing, incomes are growing, households are growing, jobs are growing, jobs are diversified. So we're seeing these express car washes pop up in secondary and tertiary areas of metropolitan service areas. Now, we are not seeing them pop up. Right now there's about 29,000 car washes. Okay, we are not seeing them grow in areas where populations are contracting. So very important, there. Also, you have to also consider that it's location dependent. Location, location, location. That's a immutable law of real estate, even more so with express car washes. You need to be in the right metropolitan service area, in the right submarket, on the right street corner in the submarket with the right traffic count. So this is you have to do an incredible amount of research here. You might have seen models, franchise models. I'm going to kind of show you the differences between investing in direct ownership versus franchise models here in a second. But in either case, make sure that you are evaluating the location of the asset. That's why we love investing in already operational car washes, because we can see that historical data and we're not kind of taking a big leap on whether that business is going to succeed on that street corner or not. Cash flow, okay, another wealth pillar. Express car washes, as we already seen, are low operational overhead, high profit margin type businesses, as opposed to the other different types of car wash models. So it's a very cash intensive business. And even more so if you have direct ownership of the brand. So I always say, own the land, own the brand. I apologize, I got to mute myself 1 second. Okay, so we want to own the land and own the brand. This is very important. If you're investing in a car wash and the operator does, or either if you're the operator and you choose to lease the land, or you're investing with an operator and they don't own the land, you're opening yourself up to not controlling your profit and loss statement. What happens if the landlord decides to raise rents over the next 5, 10, 20 years on you? What happens to your cash flow and returns to not only yourself, your investors, but also the landlord could sell the land out from underneath you for development reasons as well. So you want to see those safeguards there. We always talk about the brand too, wanting to own the brand. There are a lot of opportunities out there to invest in franchise models. It's just, you just want to, make sure that you understand the risk there by doing that. When you own the brand, you control the end-to-end, identity, and how that car wash operates. All right. You can expect that, the how it's run is going to be standardized location to location. When you have a franchise model, you have brand guidelines, but somebody might be operating their guidelines like at Tip Top, and then the brand across town, same brand, the location across town might be like operating in the C level. So that can actually impact the cash flow at the two different areas. So we want to take into account that. When we evaluate the asset, express car washes based on tax benefits, this is very appealing whether you do your own ground up construction or you invest in a passive deal, is because it's an operating business that owns real estate. Okay, it's not a commercial real estate investment. It's an operating business that owns real estate. We can actually take some very high year one depreciative losses because we're performing a cost segregation analysis, accelerating the depreciation to the early years of the hold and taking advantage of bonus depreciation. And when you have all that, those mechanicals that are being depreciated, it throws off, for our projects, we're looking at about 70 to 90% year one loss. So, but that goes whether you own your own locations or are investing in somebody else's deal. It's also a great inflation hedge to invest in express car washes. Now, inflation hedge, typically means that you are buying the car wash in today's dollars, it's depreciating and you're paying it back with future dollars that are less valuable. Another way that we can look at that is actually on how do we look at the income that is being generated on an express car wash. How often can I adjust that income as things happen in the market environment? And with an express car wash, one of the things that we love doing in particular is moving people from single pay transactions, which a lot of these mom and pop owners are still doing, to a subscription model. That allows us not only to stabilize the income throughout the entire year, but again, once that behavior is established, people rarely give it up. So, we're harvesting cash flow throughout the year. Simultaneously, if we needed to modulate the subscription, we can pretty readily by 10 or 15%. And, most people aren't going to really balk at that because it's not a substantial line item in the family budget. Now, conversely, an investor might say, okay, Winnie, I see your point, but what happens when that person washes their car every single day? Well, let's take a look at the data. The data, first of all, it's the when somebody washes their car, between water, electricity, chemicals, stuff like that, it's about 80 cents to $1 per wash. Now that doesn't take into account labor or anything like that. So there's still a little bit of overhead to factor in there. The average customer, for us, our average customer washes their car about 1.8 times a month, which aligns with the market data of 2 washes per month. So if a subscription is $25, $35, or $45, you have a hefty room in there to be able to modulate your profit margins and your income. And then conversely, you can also adjust your operations. While you can adjust your income, you can also adjust your operations with an express tunnel. Because, excuse me for a second. Because when somebody enters that tunnel, they can actually, you as the owner or the operator of that business, whoever that person is, can actually modulate how fast the tunnel moves, which impacts how much electricity is being used, how much water is being used, how many chemicals are being used. When you have your customer on a subscription model, I can actually keep track when they scan their card and they drive through. Okay, they're on a $25 level subscription. That means they get tire shine applied or a wax applied like every 4 washes. Okay. Whereas somebody at my 45 level gets that tire shine and wax applied like every wash, right? We can adjust that operation very readily. All right. But the one thing that I really, really want to drive home here is the equity component. Okay. And this goes again, whether you buy your own car wash and, ground up development and, you probably need to have $1.5 to $2 million cash ready to go to do that. Or if you invest in a deal passively. Again, we are in a unique position in the express car wash environment with early market consolidation. And the puzzle piece, the reason why big money hasn't quite gotten in here yet is because there's a lack of third-party management. So BlackRock can't come in here, buy 100 car washes and expect to, just look up, the local property manager and add all of those 100 car washes into property management. No, they would actually have to build their own operations team to manage those car washes, which companies like that just aren't going to do. They want to have kind of a plug and play model. That is something that for us personally at passiveinvesting.com, we have solved. We have actually built a third-party management company to scale our 250 to 300 location express car wash locations. And you can expect to see that start, creeping up over time over the next few years. So this is really a great time to get in and invest in this arena before that consolidation really starts ramping up and that third-party management, issue is really resolved across the industry as a whole. Okay. Be an early adopter is what I'm saying. When we talk about how to boost equity or boost value on a car wash. It's very like multifamily and self-storage. So most people here are very familiar with, hey, if I invest in a multifamily real estate deal, how is the net operating income being pushed up to push the value of the project, to grow the equity of the project? Well, here in a cash intensive business, in a cash flowing business, we don't use the term net operating income. We use the term expected gross income, but fairly synonymous. We're pulling essentially the same levers. How can you increase income, decrease expenses, and add additional streams of income? So, we're adding income by moving from single pay to subscription model. We're also adding income by, reconfiguring some of these like locations, adding additional branding on there, moving them into our property management company, which allows us to create operational efficiencies. And you can do this yourself as well. Okay. The operational efficiencies here, you could consolidate multiple locations from multiple mom and pop owners, get more buying power here to lower your cost of on the chemicals. You can put in better equipment to lower your electricity cost. You can put in water reclamation systems to lower your water costs. Also, give a little nudge to the environment, environmental issues there. So there's so many different ways on express car washes that you can lower operational or create operational efficiencies, lower your operational overhead. And then just like you would in multifamily or self-storage, how can you add additional streams of income? Here we'd be adding amenities. A large, one of the key ways to add amenities isn't necessarily to be able to charge more. I mean, there's definitely that, but it could be to stand out your brand from another brand across town. Okay. And when you have a larger portfolio, it's going to be easier to do that. Okay. If you just have like 4 or 5 locations, not going to be super easy to do that, right? You don't have the buying power to offer those additional amenities at any scalable cost. But when you have a larger portfolio, like 20, 30, 40, 100, 200 locations, you can do that. For us, we're looking to add in, a deck of vacuums, free vacuums, free scents. One of my favorites that I love, I have a dog. So I would, love nothing more to take my car through an express car wash, get the car clean, and be able to pay a couple dollars extra and wash my dog in somebody else's tub, and put a clean dog in a clean car. All right. And then another way to think about the equity growth with express car washes is how would you exit that particular investment? And there's typically 3 different ways we would look at exiting a portfolio. And it depends on how big you're able to scale the portfolio. So if you're just doing building, doing ground up, a couple, 3 or 4 locations on your own, or investing directly in 3 or 4 direct car washes, your probable exit is going to be individual sale, which is fine, fantastic. You're probably looking at about a 2 to 4x equity multiple exit. Okay. And we can talk about how that the valuation is calculated in the Q&A section if somebody has questions on that. What's more attractive, since big money isn't in this yet, is to put yourself in a position to where you can be involved in a larger portfolio of, say, 100, 200, 300 locations, because that's probably going to be a larger private equity exit. You're going to roll, either you yourself are constructing that, or you're invested with an operator that's doing that, and they can like pull all those assets together, do one large exit, and you're probably going to get closer to, probably a 5 to 10x multiple exit because of how it's valuated. And of course, we have case studies already we've seen over the past couple years of actually large IPO exits. Okay, so initial public offerings, and that path to exit is probably going to be somewhere 7 to 14x equity multiple. So great opportunity there. Again, what makes this different is that you're investing in a business. Okay, so that can grow the cash flow. So very different than commercial real estate. Now, just to kind of head off some of the questions here, I'll just take a quick minute to go over what we are doing. We have our particular car wash that we do. It's the Hurricane Express Car Wash. Our strategy is to build 250 to 300 locations, acquire that, either do direct operations and acquire it. We are going to do some ground up development. We own the land, own the brand. We have the third party management company. We have a very strong return structure for our investors at a 10% preferred return, 12 to 15% cash on cash. I put our equity growth, equity shares there, 60-40 to 20% IRR, 40-60 to 30% IRR. And we leave our investor uncapped past that 30% IRR so they can continue to participate in the deal alongside us. Very strong year one losses. Our current portfolio is kicking off about 70 to 90% year one loss. And for us, we are looking, since we're looking to scale that 250 to 300 unit location, we are looking to do that IPO exit at about a 10 to 14x valuation. Again, backup strategy would be 4 to 10x private equity roll up. But what we show our investors is not those first two exits. We show them the financials, very conservative financials on individual sale or a small portfolio sale exit. Now, if you are interested, I'm going to give you my contact information again. You can definitely reach out to me. But what's key here? Okay, remember, I went through 6 pillars of wealth building. The 7th pillar, you have to invest with the experts, whether you become the expert or you're investing with other experts. They have to have knowledge on the strategy. They have to have the expertise and track record to perform. All right. They have to have the ability to secure credit and lending for high quality assets. For us, we're not looking to take over underperforming assets and then assets that have zero performance and try to scale them. We're looking to actually acquire performing assets to date. All right. And then you have to have that team and network to help support the assets. And, for us, with our property management company, we already have 130 member team working on behalf of our investors to help them with scale their portfolios. And if I assume there's going to be some questions popping up here. I went over a lot of information in a short amount of time, but I wanted to make sure that I left plenty of time for Q&A. But here is just a quick way to reach out to me if you want to get more information. You can go to passiveinvestingwithwhitney.com or scan this little QR code. Quick little form to fill out, and then you can hop on my calendar. All right. And then there's my contact information again if you want to reach out to me via email. Sarah, do we have any questions?
There we go. My microphone was off. All right, let's try that again. So it looks like we posted an announcement to get people to ask some questions. They may just still be listening, not typing anything quite yet. But I know that there was one, if I'm not mistaken, you mentioned in your presentation that if we got a question about it, you would kind of elaborate on it. Just in case we don't, let's go ahead and talk about that.
Oh, okay, I don't remember exactly what I was referring to, but
I think it was about exiting, possibly, maybe.
Oh, exiting, yeah. So, and I think I went over that at the end. I'll just back up the slide a little bit here. Exiting, that's going to be really unique. You want to actually understand, like, whether you are building your portfolio, right? You always want to think in the end of mind, right? Whether you are building your own assets or whether you're investing in somebody else's assets, like, what is the end in mind? How are they going to be exiting this portfolio? Now, where the real money is made is going to be in that IPO. But they have to have a clear path to get to over 200 locations in order to IPO. And as we said, 85% in the industry never made it above 5 locations. It's super hard. So I say that because I can totally see investors chasing yield right now. If they're evaluating a deal and somebody says, oh, by the way, like, hey, we're looking to IPO. They're not going to, and the next logical question is, how many locations are you looking to scale to? And if they say 60 or 70, they're not IPOing. No way, not happening. So investors need to be empowered to understand, like, at what portfolio size do each of these exits actually happen at. And so, individual sale, small portfolio sale, that can happen at 1, 2, 5, 10 units, right? Whatever, any unit count. Roll up to a REIT, it's probably going to happen at about 7,500 or 150 locations. IPOing is going to probably happen at about 250, 300 locations. And so, have investors understand that they need to kind of understand, like, what questions they need to ask for themselves to understand their goal. But 2, if they're investing in somebody else's deal, really understand what it takes to actually have those different types of exits.
Love that. And that kind of got the questions going. So we have 2 questions in this from Mike. With an IRA investment, how do the tax benefits accrue to the IRA? What are UBIT implications for this type of investment?
Well, I'm not an accountant, so I have to plug that first. And so the tax benefits would stay in the IRA. I think most people don't understand, the IRA is for benefit of person's name, right? So it's not even yours. It's not your money yet, right? Like, you haven't taken it out. So the tax benefits aren't yours. You can't claim those on your 1040. They stay locked up in there. So that you would work with your accountant to figure out how to, I know there's some maneuvers in there, like filing a 990T. I'm getting that at an accountant, but like, claim those losses. That way, if you have an exit, then now you have booked those losses and you can use those losses against the capital gains and stuff like that. So they would stay there. They don't go away. You would utilize them whenever there's a particular exit. What are the implications for this type of investment? I would, ideally, here's my thought process on it. If you're looking for the high year 1 losses and you need to book those, I would probably invest cash if you can do it. But think fast forward, these are heavy cash intensive businesses. So if you, like, in years 3, 4, and 5, you're going to be probably ramping up to like 12 to 15% cash on cash. That's a great investment for an IRA to keep that all tax sheltered.
That is an amazing answer. I would have said something quite similar. But yeah. And again, if you want help with kind of figuring out where you can kind of, get that UBIT or whatnot, talk to someone who's knowledgeable. We have a lot of people that are really familiar with these types of investments in self-directed IRA. So reach out to us or whatnot. Were the car washes affected by the pandemic?
Yes, they were, but in a positive way. They actually became a source of entertainment for the family. That's what the research said. We were actually looking to launch car washes before the pandemic hit, and of course, like, we just kind of pushed pause on putting out any new verticals during that timeline. But it became a source of family entertainment. Whenever you have these like tunnels, you can actually ride in your car going through the tunnel. And, some of them, we have some like fancy light shows and sounds and stuff like that. I know when I take my daughter to the one here in town, we don't ride through the car, but when the car comes through, there's this whole like show that happens. It's hysterical. So yeah.
It's almost like a little concert in there.
It is. Yeah.
Is there a minimum investment amount, and are there quarterly payouts? I'm sure this is in relation to your funds and things.
I want to, kind of, complete the other question, because it makes me think that person might have missed my, comment in the talk. Is when we're in recession resilient times, people, like during COVID, people were scared to spend money. They weren't going out and shopping. They weren't able to get, loans, right? Lending has pretty much dried up in certain aspects. You couldn't get a new car, right? You couldn't get a chip for a car to get a new car. So you literally couldn't get a new car. So people had to take better care of their cars. And that's a bit common cyclical behavior we've seen in this industry.
Awesome.
Thank you for putting that back up there. Yep.
Yeah. No, we want to make sure we get all of it answered for everybody online. So
Yeah.
back to this one. We'll go back to that one now.
Mhm. Yeah, minimum investment. So the way we do it, our investments. Okay, so every operator's different. With our acquisitions, we have acquisitions and development. Today, we're talking specifically about the acquisitions. I'm happy for those people who are interested in development because that would pair really nicely with a self-directed IRA. But if you're interested in stabilized cash flowing assets now, um, acquisitions is where you want to be. We put our assets in like 3, 5, 7 unit portfolios. And so typically our minimum investments are a little bit higher because you're getting instant market diversification, instant asset diversification. So we're typically at $100,000. Now the payouts for our car washes, anything that we're acquiring here going forward is going to be a monthly payout. That's what we're targeting for that. But somebody's like, I only have 50,000 in my IRA. Just reach out to me. Let's talk. Let's see if we can come up with a solution for you.
Love it. Okay, we'll go to this one. What is the amount of your fund raised? From Doug.
So we are doing small portfolios, and so we do have an opportunity open right now, so you guys can reach out to me right now and I can plug you in. But never fear, we're looking to pick up 100 locations this year. So if timing's not right, just reach out to me. Let's have a conversation. But so each of the raises are probably between $10 to $15 million ish. So yeah, it really depends on how many units we're putting in the portfolio.
Okay, it looks like we pulled up this question from Greg. It says, how does the return in investing in car washes compare to investing in multifamily apartments?
Yeah. So for us right now in our deals, I put up the cash flow, for a car wash. Again, just really clear here. It's not commercial real estate. It is a cash flowing business that has a real estate component because we own the land and own the brand. We are offering a 10% preferred return. Most multifamily right now is a 7% preferred return. Year one cash flow is, during stabilization, is probably going to be 5 to 7% on a car wash. For multifamily, you're probably at about 3 to 5%. So stronger year one cash flows. I would say cash on cash for car washes, by year 3, we're probably somewhere 10, 12, ramping up to 15% by year 5. Multifamily, you're probably closer to, on a Class A deal, you may never get over 7% cash on cash in the first 5 years, to be honest. You will probably hover just below that return. And that on the equity side of things, because the cash flow is so strong, we're looking to share that with our investors. The equity component, we do 60-40 to 20% IRR, 40-60 to 30% IRR, and then 10-90 after. Multifamily, you're probably some sort of 70-30 split to 13 or 15% IRR.
Awesome. Okay, I'm going to have him pull up this one from, here we go. Mr. Frederick Clifton. In what areas do express car washes in what areas do the ROI, where is it the highest for the express car washes?
I get so excited talking about those. The car washes, I'm getting a little tickle in the back of my throat. Sorry, guys. So we're looking for our portfolio. We are developing majority of this in the Southeast. One, it's because population's growing there, big businesses moving there. We've got jobs moving there. We have it's tax favorable in that area as well, right? Just like with multifamily. So a lot of overlap there. So that kind of like boosts the ROI there. But express car washes can do very well, anywhere. Like, they're popping up. I live in Boulder, Colorado. They're popping up all over the Denver metro area. We spent them in Arizona, popping up all over the Phoenix area. They can do really well. It's not like rents, right? Multifamily rents, where like in one area, a 3-bedroom, 2-bath might rent for $800, and in another area it's renting for $3,000. This is going to be a little bit different, so it can do well in any area.
Okay, we have one from T. Do you have to be an accredited investor?
Yeah, so for our deals, we do work with accredited investors. Will have a Reg A fund opening here in about 6 months that will invest alongside all of our deals, and so that will allow opportunity for sophisticated investors. So still worthwhile, for us to have a conversation.
Awesome. I'm going to pull up one of these last questions here because we have a lot of people. It sounds like they probably should reach out to you because they may want to get some more information, more in depth. But I really like this one. Tanweer says, very informative presentation. I'm new to the car wash industry, looking into this business to diversify. Do you have a model that can help us to evaluate a good business model?
Yeah, so I guess my follow-up question to there would be like, are you looking to get into actively or passively? Because that would be two different ways to evaluate, right? Like if you're looking to get into actively, honestly, there's a car wash industry conference beginning of May in Vegas. That would be where I'd go, and that would be like the who's who in car washes are active investing are there. If you're looking to get into passively, the model that I shared here is a great start. And we can have a one-on-one conversation and dig into what your specific needs are.
Okay, I'm also going to post your contact information here so that everyone can reach out and see that there. Let's go over here to this one. And if you want, feel free to answer this. Can you give us a typical pro forma revenue versus expenses?
Yeah, so I was asked to keep this very educational, and yes, I can share that with you. Reach out to me directly at passiveinvestingwithwhitney.com, and I will share with you like whatever you need to make a good investing decision for yourself. For us, I will tell you, when you buy a car wash, most car washes are ass price right now. It's a value. Okay, the purchase is it's a multiple of revenue. Okay, and so car washes are trading about 12.5 to 15x multiple of revenue. Not revenue, sorry, profit, EBITDA. We're purchasing our car washes at about 7 to 10x EBITDA, and we're trying to keep the purchase of those car washes, the OPEX at around 55% or less. And so, we're looking to get, drive the, make our money on the buy side, essentially. Yes.
Boom. Okay. Some of these questions, it sounds like there's some conversations happening. We love to see that, y'all. Engagement in the comments. And I'm going to put up the information to reach you one last time. If you would like to get some more information and kind of go into the nitty gritties of kind of some of the tax things, or even if you want to give us a call, have a conversation with an IRA specialist, we can kind of work through, what accounts you have, what investments you're doing, and see maybe, how we can get some of these kind of more in-depth questions that may be more scenario-based. But reach out to Whitney, passiveinvestingwithwhitney.com. Whitney, do you have any last comments for us as we kind of round out here?
Yeah, if I can comment to a couple of things in the chat, as far as like depreciation, well, one was like, what's the expected time frame for our passiveinvesting.com to get to 200 car washes or more? We're looking to get over that threshold, in about 3 years, get everything stabilized, and then look to perform the exit around 5. As far as the losses, if you invest passively in a car wash deal, we have it structured where you can take passive losses. Otherwise, if you invest actively in a deal, guess what is active losses? You can't use that against passive income, or passive losses against active income. And then one other question there is, how do you know if you're a accredited investor or not? One of my favorite resources is to, well, we can go over that really quickly, but you can go to parallelmarkets.com. And they're a third-party organization. We use them to qualify our investors. And you can just follow their process and figure it out. That's probably the easiest way. But the rules are, it can be you can meet one of 3 tests based on income or net worth. Net worth is pretty easy. Do you have $1 million in assets or more outside of your primary residence? Okay. If you do, you're accredited. Okay. Now you got to go get your letter, right? Or the income test is if you earn $200,000 or more a year individually for the past 2 years and reasonable expectations going forward, or $300,000 a year jointly with a spouse or a spousal equivalent for the past 2 years and reasonable expectations going forward. Now, there's a couple other nuances in there. If you have a Series 7, 65, or 82 license, that could also get you across the accredited threshold line. But my suggestion is go to that parallelmarkets.com. It's free to see, work through their process and see if you can get yourself a letter.
Awesome. Thanks for answering that for Jeanette. Alrighty, guys. Well, we will round it up here. I want to say thank you to everyone for joining us today. Also, Whitney, for giving us an hour of your time and answering all these questions. And hopefully now you can kind of just relax, enjoy your weekend. I'm going to be staying inside because it's cold. But everybody, just one last time, we'll pull that up here. Join us again. We will have our next class on next Tuesday at 6:30 Central Time, and we hope to see you there. So thank you, everybody.
Thank you, Sarah. Have a great day.